A tax freight train is bearing down on your retirement. To protect yourself, you'll have to harness the power of zero.
Hello, folks. This is David McKnight. Welcome to the Power Zero Show. I am the best-selling author of The Power Zero, Look Before You Lerp, The Volatility Shield, and soon to come, November 17th, Tax-Free Income for Life. As you know, if you buy a hard copy anywhere, if you pre-order the hard copy, you can download instantly Chapter 1 at davidmcknight.com, and I would encourage you to do. If you're looking to follow me on Twitter, you can do so at McKnight & Co, at McKnight & Co. If you're looking for someone to shepherd you along the path that leads to the 0% tax bracket, look no further than davidmcknight.com. We'd be happy to hook you up with a qualified advisor. If you're an advisor looking to transition your practice to a Power of Zero style practice, look no further than powerofzero.com. Today, we're going to talk about what Joe Biden has in store for your 401k. This is something that that is only coming out now. I've done past podcasts on what Joe Biden's tax plan is. And historically, he has said that anybody making less than $400,000, your taxes are not going to go up. Turns out that may not be the case. I think what Joe Biden may have been saying is that your tax bracket won't go up. But what we're going to talk about today is how some people may lose some deductibility in their 401k contributions, which would ultimately result in an effective increase in the amount of taxes that you're paying. So let's go through this. So as you know, this is how 401k works. If you are in the highest marginal tax bracket, let's say 37, and you contribute $1 to your 401k, then you are going to save 37 cents. Now you may say, hey, where is that tax savings showing up? Some people convert or contribute to their 401k more than they otherwise would to account for the fact that their 37 cents is going to be saved. So that 37 cent savings can actually be in your 401k. That tax savings technically allows you, if you take advantage of it, allows you to save more than you otherwise would. And of course, if you're only in the 10% tax bracket, you only save 10 cents every time you contribute $1 to your 401k. Now, we're not going to get into state taxes, but know that state taxes, depending on what state you're in, if you're in New York, we're talking 9%. If you're in California, you're talking 13%. So even more deductibility at the state level. But we're just not going to get into state taxes. We just want to keep it nice and clean and simple today and talk about what happens on the federal level. Joe Biden's take is that for those who are in the higher income tax brackets, when they contribute to a 401k, the benefits are unduly weighted towards them. So for example, like I said earlier, someone in the 37% tax bracket contributes $1, they're saving 37 cents in tax, whereas somebody who's in the 10% tax bracket contributes $1, they're only saving 10 cents. So Joe Biden wants to level the playing field. Again, as with all political discussions, I'm not here to weigh or measure the merits of any proposal, just to talk about the impact on you. So what Joe Biden is planning on doing, and it's a little short on details at this point, but what he would do is he would create a standard rate at which everyone could deduct money contributed to their 401k. Now, just because Joe Biden hasn't told the public what that rate would be, it hasn't stopped people from speculating. What a lot of economists say is that in order for this proposal to be revenue neutral, economists have said that the rate would have to be around 20%. In other words, you're in the 37% tax bracket, you contribute $1 to your 401k. Instead of deducting 37 cents, you are only going to deduct 20 cents. Now, on the flip side, we have to look at the flip side if you're in one of those lower brackets. If you're in the 10% tax bracket, for example, you contribute $1 to your 401k, you will be able to now deduct 20 cents. So this turns into a really good deal for people who are below whatever that threshold that Joe Biden decides to choose. And we're going to assume that threshold is 20 cents just for today's example. So if you are in those lower income tax brackets, this turns into a really good deal for you. Okay, now that we know what the proposal is, let's talk about some of the practical ramifications of all this. For starters, if you are in a marginal tax bracket that's higher than that 20 cent deductibility level, so this is really anyone above 22 or above, so 22, 24, 32, 35, 37% tax brackets, it's probably not going to make sense mathematically for you to get that deduction at the 20 cents. So I think what you're going to see is you're going to get a lot of these higher income earners who are simply going to pay tax on that money instead of going for the deduction today, particularly since we are in a rising tax rate environment. They're going to say, hey, look, paying tax at foregoing that deduction at 20 cents is not going to allow me to put all that much more into my 401k. Therefore, I will pay the tax on that 401k today, and then I will not postpone the payment of the taxes till somewhere down the road, and I will get that money out tax-free down the road. So it throws that whole historical conversation out the window. If you can get a deduction at a higher rate today and postpone the payment of those taxes somewhere down the road, which one are you going to be? Which are you going to be higher today or somewhere down the road? That is a discussion that we have to reassess. And I think what we're going to find is that the people that are in those higher tax brackets, I'm talking 22, 24, 32, 35, 37, I think they're going to start opting for Roth IRAs and Roth 401ks and putting money into their LIRPs instead of putting money into a 401k where they're only going to be able to deduct 20 cents on the dollar. So I think the net effect of all this is it's going to accelerate the flow of money into tax-free accounts. Now, historically, I've got to clarify, and I've had discussions with White Coat Investor over this. I don't think it necessarily makes sense historically for someone in the highest marginal tax bracket to forego that 37% tax deduction, because after all, if you're in California and you're putting 13% on top of that, now you're deducting 50%. It's really hard to refuse. It's hard to forego that deduction today, because if you forwent that deduction today, what you're basically saying is that you think that tax rates down the road will be even higher than 50%. And shoot, that may be the case, but I don't think there's a lot of people that want to really give up that deduction today. Given this proposal, I think that all of that's turned on its ear. I think you will start to see these people that don't get these 50% deductions anymore. I think you'll see that they'll forego putting money into the 401k. Like I said at the beginning, Joe Biden has pledged to not raise taxes on anyone making less than $400,000. Guess what? For those tax brackets, for people who are making $350,000 or $300,000 or $350 or $350, $300, $250, $200, I think what you're going to find is that you will be paying more taxes if you no longer have the ability to deduct 401k contributions at your highest marginal tax bracket. So, what's the bottom line? I think that this means that anybody who's in the 22% tax bracket and higher, and remember in 2026, that's 25%. The 22 becomes 25, the 24 becomes 28. I think that you're going to find that they're going to stop making contributions to 401ks and redirecting those contributions to Roth 401ks or other tax-free plans. And this will mean that effective tax rates will increase for those who make less than $400,000. 401k contributions are a huge source of tax savings for middle America, and you're going to see that tax deduction become less and less attractive. But I think that there is a silver lining in all of this. The silver lining in all of this is that a lot more people who would not otherwise have done so are going to be contributing money to tax-free investments. So there is a positive unintended consequence that stems from all of this. And that's that more Americans, perhaps unwittingly, are going to be prepared for an eventual rise in tax rates. And I have to admit, I never thought I'd thank Joe Biden for enlisting in the cause, but I think that this type of change will ultimately induce more people to protect their wealth from a dramatic rise in tax rates over time. My job, I think, is to just make you aware of some of these tax changes that could be coming down the pike. Now, keep in mind, last week I talked about the race between Biden and Trump tightening. Guess what? It's tightened even further since you heard from me last week, and perhaps the Biden proposal will all be a moot point, but perhaps if he gets elected, you will see that you're going to have to reassess and reevaluate your approach to saving money for retirement. Now, one thing to keep in mind is that if Biden gets elected, I think a lot of people think that he is going to serve 2 years and then bow out in favor of Kamala Harris. Now, keep in mind, if Kamala Harris serves for 2 years, that does not count as a term. So she serves 2 years, then she can get technically reelected for 2 more terms after that. And we're talking potentially 10 years where Kamala Harris could be president should Joe Biden get elected. And I think they would put her in at the 2-year mark simply because it's much easier for her to get elected if she is an incumbent. And of course, once you're an incumbent, it's awfully hard to unseat you. So you could be looking, should Joe Biden get elected, you could be looking at Kamala Harris as president for 10 years. So I think that should inform, should Joe Biden get elected, I think that should inform a lot of your strategy as it relates to getting money to tax-free. I think you're going to see, as I've said in the past, tax rates will go up under Republicans and Democrats, but they'll go up much faster under Democrats. And you're going to have to really tweak your shifting schedule accordingly. All right, folks, that is the show today. Once again, subscribe. We could always use a review of Power of Zero or any of our books on Amazon. Again, please pre-order Tax-Free Income for Life. I'd be honored if you do, but you got to get the hard copy. That's the one that counts towards the bestseller list. And follow me on Twitter, @McKnight&Co, @McKnight&Co. I appreciate all of you listening, and we'll look forward to chatting with you same time next week.